Today we have Kyle Kuderewski from Webstreet. We're going to be talking about his story going from real estate and also getting into different worlds such as private equity, buying websites. Speaking for myself, started off with rental properties back in 2009, did the turnkey thing for a while, then getting into syndications and private placements. As I've started to expand my universe, or to use a Marvel comic analogy, I've been playing around with real estate, which is your Iron Mans, your Captain Americas, people of the earthly world. And then as I start to drift out into different multiverses, you start to meet other types of people out there, like the Eternals and the Thor people. But the analogy is there are other types of investment worlds. The real estate ecosystem is one, the house flipper real estate ecosystem is another, and the bogglehead stocks, bonds, mutual fund is another ecosystem. You can get a bit of groupthink. So I've always tried to drift off into different ecosystems and multiverses. I'm part of some groups outside of the real estate space in the online business world, and that's where I ran across Kyle. But yeah, Kyle, you got a similar background with just as a mom and pop real estate investor. Maybe tell us a little bit about your story. I think it'd be insightful for people following the same path, getting to be a more sophisticated investor.
Yeah, awesome, man. Thanks for having me. And I like the analogy. I think it holds pretty true. So the Marvel analogy. Yeah, my name's Kyle Kuderewski. I'm here today talking mostly, I think, about digital assets and not just investments in general. I started out in pretty traditional path. I went to engineering school, got into corporate America, got a really good foundational kind of stable start to life, which I'm thankful for. But I knew I had an entrepreneurial itch. I didn't want to stick with that forever. After about coming up on a decade, I started getting serious about investing. And I live on the East Coast of the United States near Savannah, Georgia, which I think you get some interest in there recently, I saw. And I purchased my own property, and then I really kept an eye on the market and first got into vacation rental. There's a beach just about a block away. That was my first purchase, was a duplex near the beach, and it just did really well and has been a blessing. And from there, I've expanded into more, into multifamily and into other vacation rentals and things like that.
The carbon date
Yeah.
yourself, what kind of year was that? Just to
Yeah,
put in
this was
context.
in closed in early 2018, which doesn't sound that long ago, but I guess it was 6 years ago or so. So it's been a little while now.
Yeah, like the real estate world's been a slumber these last few years. So it's just like COVID, you don't see your friends from 2020 to 2023 very much.
That's
Time
exactly
flies.
right. And I was doing well, like I said, and I wanted to do more, but everything was in a slumber and I was just getting offers in the mailbox and I didn't want to sell. Anyway, I pivoted a little bit. The reason I knew about the online business space is when I was trying to get away from the corporate America world, I was doing my research and I didn't mean to land on real estate. I was just looking for all types of different investment products and ways to get out of corporate America. And I learned about the online business space. And even though I didn't make that my first move, I kept an eye on it. And when real estate slowed down, I pivoted and now this is the space I'm in.
I'm always interested in people's pedigrees. Like, what kind of engineer were you, and did that kind of
Yeah.
help?
My undergrad was mechanical, which I've used almost 0% of. But what I did use a lot of was project management. I was managing large projects, making sure the right hands were being shaken and the right people were talking to each other. So managed some really large projects, which I think helped me out. And then I also did my master's in engineering and I doubled down and it was in engineering management. So again, managing people, managing large projects and multitasking and that type of thing. And yeah. And what about you? You did engineering as well,
I
right?
did industrial, so I wasn't as smart
Industrial.
as you, but I
Yeah,
guess maybe
well,
that is it's
yeah,
2% correlation because we get a wider range of 101 engineering classes in
got
that
it.
major.
That engineering management major fell into industrial engineering college there at Kansas State, and I really enjoyed that. So I think you're selling yourself short. I like the industrial field.
So you bought the real estate. It was a passive thing, right? You're still working your day job at the
Yeah,
time. And
yeah,
then you went into more of an operator role in buying businesses, or what was the
yeah.
next
So
step?
I knew about a one of the large brokerages called Empire Flippers, and they're like I said, they're a brokerage similar to a physical business brokerage. If I build a website, I want to sell it, I might go to them. I might go to Flippa. I might go to Quiet Light. I might go to Fee International. There's a bunch of different brokers out there. I didn't end up purchasing a business, but I kept an eye on it, and I really liked the culture that Empire Flippers had. They started a spinoff called Empire Flippers Capital that made it possible for people to invest in online businesses rather than buying them in a completely passive way. And it was a sister company. And I looked at investing with them, and then I chose not to. I think I put the money to work somewhere else. And then when I saw that company starting to grow, I saw they were searching for an operations guy, and I threw my hat in the ring. And that was about 4 years ago now. Moved to Medellin, Colombia, trained under our founder, and have been with him ever since. So I'm operations manager now. And Empire Flippers Capital became Webstreet.
Yeah, yeah, and I'm probably guessing you're looking for a change of pace from the corporate world, right?
Yeah,
Yeah.
that was exactly it. I believed in online businesses again because I almost purchased one. I believed in it. I knew investing. And then I knew Empire Flippers culture. It's a remote work team of really talented, hardworking individuals spread out all over the world and with the right values and the right vision. And so I wanted to become a part of that team, and change of pace was a big part of that too.
Yeah, so let me catch people up to speed here a little bit, and
Sure.
Kyle, you're welcome to step in here if I'm butchering things. But I found this world maybe in 2019 or 2000, probably when I was stuck at home googling things on my own. But just I think a lot of people are familiar with the real estate guru world or all these programs, which I think are BS, where they
Right.
teach people how to do this, and not many people are successful. That was essentially the genesis of our group, right? We worked with a lot of people, and you find out who's legit, who's not, who's just a fake it till you make it person. And there's a handful of these in the real estate world. And I think if you listen to this podcast, you're very familiar with this kind of ecosystem out there of young upper starts, wannabe general partner types. But in another galaxy far away in the online space, you have these kinds of worlds. I would say it's not as mature. You don't have these big educational groups, but Kyle rattled off a few platforms there. They're more on the brokerage side than like the education. Take your 40 grand and you don't get anything kind of education programs out there. But it's a much, much smaller space. And it's also a tighter online community too, because people are pretty good at talking on these Discord channels. But Empire Flippers, the one that Kyle's a part of, just from my point of view, was always in the beginning, it was this really tight organization, a lot of very respected. The name was a little off-putting, I think. That's why they
Yeah,
changed
yeah,
the
we've heard
brand. It was
that.
a little early days and appealed to the people in the beginning, right? Your early
Correct.
adopters.
And then we became too well established. We were the top dog in the space, and it was like too late to change it up. So we definitely got the feedback. It was We started out flipping $1,000, $2,000 sites, and then we flipped a business for $13 million a few years ago. So yeah, the name didn't quite grow with it. But anyway, I wanted to agree with you.
It took me like 2 or 3 years to figure all this out. Now you don't have to waste $700 going to 3 random conferences, talking to 50 random fake it till you make it guys to figure this ecosystem out. That's pretty much how it is out there. And you start to realize there's not institutional firms, but these larger names that are players in the space. And they aggregate. A lot of these guys are just more brokerages in a way
Yeah.
that they find business to buy. But maybe talk to us about what you guys do, what these brokerages do, and the process. Because I think when you look at it from the outside, there's all these words and it doesn't really mean anything, brokerage, but what the heck do they do, right? Or you all
Yeah.
do.
Sure. And just to take one step back, there still are those programs out there where it's teach you how to build an Amazon FBA site in 3 weeks, right? For
Yeah.
$1,000. That junk is still out there. Stay away
That's where the real money is for the, I
for the
mean, that's
person
like,
putting it on.
if you can't do it, educate.
Right.
That's your dad organization and all
That's,
these other something builders, right? Won't say the
that's
name, but
exactly right.
yeah.
So on the brokerage side of things, I'd say there's two ends of the spectrum, and neither of them right or wrong. They're just completely different business models. There's flippa.com. It's a bit of the Wild West. So you can list pretty much any type of digital asset you want on there with no real vetting, lower broker fees. And there's a lot of people on there looking to buy their first website or first digital asset. You can find really good deals on there, but you can find really terrible assets as well, which may not be a bad thing if you're trying it for the first time. You don't want to buy a really expensive asset. On the other end of the spectrum, you have brokerage like Empire Flippers, where they have a white glove from start to finish. So they do extreme vetting on every site that is applied to be listed on their site or on their platform. 95% of those sites or so was the last stat I saw get rejected. So you know that they're generally high quality sites that are listed on a brokerage like Empire Flippers. That doesn't mean that it's guaranteed to work or that like it's nothing's foolproof, but they've done their best to vet those websites. They want to list high quality ones. And then they have a migrations expert. So when you buy these assets, it's not as simple as just like handing over your password, right? Stock type, it could be inventory, there could be a team that comes with the asset, all of that. So there's migration specialists. So you're going to pay a higher brokerage fee for that type of experience. And then there's all kinds of brokerages in between if those are two opposite ends of the spectrum. So that's what you're paying for when you sell a site. The commission you're paying to the broker is that type of service that you're getting.
If people missed getting on the bus here, we're talking about mergers and acquisitions, M&A is
That's
the
right.
key buzzword is buying online businesses, either e-commerce businesses, like guys have multiple SKUs on Amazon, or SaaS software businesses or content websites. Like if I guess the wealth elevator is like a content website. I can't, unfortunately, I'm the face, so it's really unsellable in a way.
That's
I could
common.
list it on
Yeah,
platform.
totally. You totally could, and that's common. Sometimes what a good broker would do would structure a deal to where the face of it came on board and stuck on for 6 months or a year, and you hit certain earnouts based on that deal structure, and then you're transitioning the face over to the next person. That's probably not possible with yours. I know how much people care for what you do and all of that, but just to give an example, the founders are often very important to the site and the business, whether it's the face or behind the scenes, and so that you need to know that when you're trying to broker a deal and understand what you're getting.
How about we work through a specific like example? Obviously, we got to be confidential and not too much details, but just a working example just so people can understand the process and like the
Sure.
deal making, right? Because not a lot of people understand like what kind of goes on behind the curtain behind between the seller and buyer.
Yeah, and I think to be able to shine some light on how I can see each angle of this. So what we do at Webstreet is we make it possible for people to invest in these websites, right? We find the world's best operators or what we think they are. We raise investor money and then we go out and purchase what we think are good assets and we scale those assets and give returns to investors. So we get to actually pick the operators and then we watch them go out and find businesses and they bring them to us and we do in-depth due diligence. So a good example would be there's one we just purchased. It was about a $2.5 million SaaS asset, a website with the asset behind it, coding and all that stuff. And we go through an offer process, you do due diligence, and then
I don't know if you can say, but like a past deal where I think some people don't even understand like what like a particular like I example like Grammarly would be
yeah,
like a SaaS, like very
yeah,
prominent SaaS
Grammarly.
business.
This is a really boring one. We're talking on Zoom. That's a huge one, but Grammarly is a good example. HubSpot is a CRM. These are big ones. There's all types of scheduling tools, Notion, Monday, all of these types of tools. Anything that's a software that has recurring revenue, these things that you subscribe to and you either continue to pay because you like it or you continue to pay because you forget about it or you pay the annual subscription. Any of those are different examples of SaaS. And it bugs me because it's a buzzword right now, SaaS, 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 but there's tons of different verticals within SaaS. There's B2B, there's B2C, there's games, but then there's like very critical software. So to me, there should be delineations within it, but that's what SaaS is.
Yeah, if people want to like Google something on the side, I'll share my screen right
Sure.
now. Like AppSumo is it's a
Mhm.
fun site. It's more for
Yeah.
business owners, but this is like the graveyard or but you could potentially find a winner here. Like they will like list up and coming emerging software SaaS products where you can get for a pretty nice deal. Sometimes instead of paying when a product is mature, you might pay $30 a month. I don't know why it's always $30. Netflix, everything is $30 a month, but you can pick it up for $70 for a lifetime. Part of this is I think these companies are just trying to bump up their vanity metrics before they go out and sell. Maybe they're just trying to squeeze it before the company fails. But I'm just putting it here because you can see all the different categories of these things. And if you were never aware of this world, this might be interesting.
It's great. It's hard to pinpoint what exactly it is. It's not quite a graveyard, but it's not exactly a marketplace. It's something, but it's a great place to
Think-
go get an idea of the types of softwares we're talking
Yeah.
about. That's Noah Kagan's brainchild, I believe. He did a really good job with
Okay.
it.
I don't know. Maybe our listeners will not understand this analogy, but it's like TJ Maxx. Supposedly there's
Yeah,
some
yeah,
good
I think
deals
that's
there.
accurate. Yeah.
I just do it because my wife goes there. But going back to the real estate world, if something is on LoopNet, it's garbage. It's absolute garbage already. So it's not like LoopNet. You know, you might be able to find some gems on these
Yeah.
types of things, or Empire Flippers, or all these other websites or these brokerage sites out there, right?
Yeah, so I'll give you an idea. We do have some confidentiality, but we have some that we've been public about. So there's one that we purchased recently. It's called OnSchedge, ONSCHED.com. But this is a scheduling tool. There's all types of scheduling tools out there. So I know the first thing you want to think is roll your eyes. But
Yeah, not
what's
another freaking scheduling tool. I already got Calendly, right? But
exactly. So what we found about this one that was so unique is it's mission critical and it has all of the certifications and everything required for healthcare. So they have tons of large healthcare clients that, there's only one other option that has the certifications to be used in the healthcare niche. So that's a huge moat. When we got into the due diligence and looked at their client list, we saw several heavy hitters and a bunch in the medium range. So it's not just one or two clients carrying or customers carrying the business. We do a lot of deal structuring where we keep the founder on for a period of time to hit certain earnouts. So if those milestones aren't hit, they don't get a certain percentage of the deal. We try to keep incentives aligned. And because we're using cash for these deals, where other people might be coming in with debt or whatever, we're able to be really aggressive in our negotiation and in our deal structuring.
Some legalities out of the way. Obviously, this deal has long gone, but it's just using this as an example. But to dig into this example and kind of show some similarities with like real estate or just deal analyzing in general, this is a B2C company, so business to consumer, or
It's really B to it's no, it's B2B. The largest ones are large healthcare conglomerates, things like that.
okay. Okay.
SOC 2, HIPAA compliance, all of those things are what it has that really sets it apart from other scheduling tools. But this one does go to other businesses. Most of our SaaS acquisitions are B2C. We have a few operators that specialize in B2B. Most of them are B2C.
Yeah. The reason I bring it up, B2C is to consumer, regular individuals.
Yeah,
So that's synonymous with like multifamily real estate. You're renting
correct.
to average Joe's couple $1,000 a month. Very different than if you had a strip mall and you're renting to 12, most of which are like pretty big names like a Whole Foods or a CVS. That would be more B2B type of tenants. And then something Kyle said early on that I probably went over people's heads was your diversification of tenant base. We've been involved in some commercial office space type of projects, and I don't know about office these days. One of the nice things about office is you want to diversify your tenant base. Gone are the days where you have an entire like building all with Bank of America as your tenant. Because if Bank of America finds a new home, you're screwed. You're absolutely screwed. So you want to be diversified in your clientele. And I think this part of this I picked up just talking and BSing with other LPs out there, and when I look at other deals, this is what I've brought from real estate into looking at these types of projects. But I also come from the world of a content website operator, so I know a little bit or two, but some nuances there.
Yeah, you're spot on with the different types of tenants. These aren't vastly different, but two of the large ones that they use on that particular software is National Fitness Campaign. That's a huge gym conglomerate. It's NFC. They're all over. On the flip side, they've got pharmacies, they've got PsychWire, they've got actual hospital conglomerates. And so those are all related, but it's not one Bank of America, to your point. So you need diversification in your types of customers.
We had a conversation in our mastermind group the other night of when you're starting off in this world, you start off with things that you understand. Most people have owned a rental property or just when they went to college, they lived in an apartment. They understand that dynamic. And it's a
Right.
pretty simple dynamic of multifamily real estate. As you start to get into different types of real estate, and you probably never owned a self-storage facility, let alone ran a SaaS company. Maybe in your own workplace, you have some knowledge in the industry, but do you need it that way at some point if you trust the operator? And we're getting in more in the world of non-hard assets. The idea is we focus due diligence on the operator as opposed to the asset. I know a thing or two, but honestly, I don't know much about B2B SaaS.
Right.
And I
Yeah,
know,
you're spot on. There's a certain level of trust that you got to have in whether it's us or some other platform and in the operators we're selecting. One of our biggest bottlenecks as a company is finding the best operators. Not only have they grown businesses before, but do they have experience buying? Do they have experience selling? Those are different skill sets. And so we really try to lay out the track record of the operators. The other thing is maybe they've done it in the couple $100,000 range, but does that mean they know how to run a $10 million SaaS business? Probably not. Or if they do, we're not going to give them the chance, not with our name on it, because we have to protect investor returns. And that's never a foolproof process, but we try to be as close and as transparent to the work they've already done before we allow them to go use investor money to do it again.
yeah. So maybe can we dig into that a little bit, like in a couple ways? Like, how do you like verify the track record? And like the second thing, how do you like simple background checks too, right?
Yeah.
Maybe talk to us about that.
Yeah. So I'm the operations manager. I do about half of the company. The other half is vetting and acquisitions. But I'll tell you some of the stuff that I hear constantly from the other side of the business. First of all, our application form is pretty in depth. So that filters out like 90% of applicants. If you make it through that stage, we do a video call where we have you send your businesses that you've run. And at first, we'll take your word for it. Then we'll do an interview process. If you make it past that, we actually require you to send over your information, your P&Ls, if you've sold businesses, all of the legal side of that to prove that you've done it. Is it possible somebody could fake it? Yes, it would be hard. But the other part of it is this is a small industry at this point. We know who's done what. Every now and again, we'll get surprised, especially as we get more into SaaS, because that is bigger than just like websites. But so we'll do tons of cross referencing. The other thing we'll do is what we call simulated due diligence. So you're required to go out to the marketplaces now and find a business that would fit your criteria, bring it to us, do simulated due diligence on how you would grow it, what the growth would look like, what the risks are, all of that. And so all of these things you can start to see who's
Yeah.
legit.
So that's like an interview process in a way, because
Yeah.
the operator is getting equity, but in a way they're becoming an employee.
Yeah,
Okay.
essentially. That's right. There's a lot of requirements on there and they have to have the want to. A lot of these guys that have had huge exits just aren't interested in doing it anymore.
They got their FU money and they're
Exactly.
good.
Exactly. So there's some top dogs out there that we might try to go recruit. But even if they agree, we want their heart and their drive needs to be in it. Like now one way we tried to align incentives is we require operators to put in 5% of their own money. So if they're buying a $2 million business or a fund of $2 million businesses, they have to put in 100,000 of their own money. So it's not necessarily breaking the bank, but like it's significant skin in the game.
Yeah. That aligns very similar with our world, right? Normally that's for good operators, that's usually about on that scale. For crappy operators, they need to put way more than
Yeah.
20-30% of the kitty. But with institutional operators in our world, they don't put a dang thing. But
Yeah.
all three of these instances, they get the skin in the game, the upset, the carried interest at the end. But
That's
that's
right. Yeah, and then one way that like we really it makes our model work, or we hope it does, it has been, is we have people repeat with us. So we've had certain operators come back 3 or 4 different times over the past couple of years and buy more businesses and then repeat with us. And one carrot we have for them is if you come back and repeat, then your skin in the game drops from 5% to 4, right? And that obviously when they're coming back, they've been successful. It all feeds on itself.
yeah. One thing mentioned there was like doing fact checks on like data. Now, I think on the one hand, when you look at this stuff, you're like, this is all stuff on the internet. It's not like we can go to some warehouse. You could with ecom, right? Is their product
Yeah.
in the shelves, but a lot of the stuff is like wizardry in the internet. And that's where some people may feel more comfortable with like real estate. You have P&Ls from a CPA third party,
Like,
but I will tell you, rare occasions, it's actually happened to us. Luckily, it just didn't really impact things, but nothing's really to stop a seller from falsifying their P&Ls, their financials, right? And like, even in real estate, it's a small community. So it's like super dumb if you do
yeah.
something like that. But I knew a guy, he did a deal in the Southwest and records were hugely falsified and they ran into trouble when they took over the asset. But this is where actually, in a strange way, this online world, like you can go into somebody's, I don't know, with these accounts, like they can log in and
Yeah.
verify.
Your Ahrefs, your Google's traffic data, all of that stuff. Some of it's still falsifiable. Some of it's more verifiable. It's difficult though. It's something that we're very aware of. And we also do simple things too. We do just straight up background checks, just straight up credit report checks, things like that. Nothing's foolproof. This
Something that
one's
we do that not a lot of people know or have access to is like when we talk to a new potential partner or operator, like we can see all the assets that they've owned. We can see their current debt service coverage, their
right.
P&Ls, right? On CoStar, Yardi. These things aren't accessible to little passive investors, but we've used this to, oh, these guys, they've got 12 assets in these areas, and we start a conversation from there. But there's nothing like that in your guys where like a CoStar.
Not that I'm aware of. The biggest by far is personal references. And we were just talking. I know you met some of my team members at a conference recently. We try to get out in post COVID world, be at these
Yeah.
conferences as much as possible and develop those relationships. And also, yeah, we started an operator referral program where I don't know all the details of it, but I think if you bring a successful operator, purchases a business, goes through the whole thing, it's like a $10,000 referral fee. So again, not life-changing money, but if you had a friend who's really skilled at running a SaaS business or Amazon FBA business, we're trying to incentivize that way versus finding people randomly on the internet. And
Yeah, no, Kevin was telling me about that. So what that is, folks, if you guys you got a buddy who runs a website, or maybe your son is in your basement still living with you, tinkering with something like this, doing an Amazon business and it's obviously not going as well as he'd like. Maybe it's time to sell it, sell
Yeah,
the asset or become an operator and move over. But that program is you're trying to find good operators, honest people, but in a position that you sell the asset. And they're the hardest thing to find. This is where
by far.
it's so hard to find good businesses to buy.
By far, and that's one of the things I said it's hard for us to find operators right now. It's harder for us to find businesses that match the operator's skill set. Deal flow is difficult. That's another thing that makes good operators is some of them will come with really strong private deal flow. So businesses that aren't going to be on Empire Flippers or any of the others, Flippa, whatever. They have their own private deal flow, and that's a huge bonus. A, we know you're legit, and B, we can get good businesses at a good price.
And partly too, in your guys' where it's a smaller community, people know each other. And let me break it down for you guys. Basically, what it is, Kyle knows a guy that knows the operator, and that third party reference is so important. That's why people trying to look for just real estate deals to invest in from a syndication point of view. And I'm always like, if you don't know anybody personally, not some BS on a website, but drink beers, good buddies with somebody who knows somebody like that relationship. This is a relationship game for sure.
100%. That's invaluable.
So that means y'all got to stop just listening to podcasts all day long and get off your computer and get over to Hawaii in January. But hey, you can just sit in your boxers and just get crappy deal flow is the alternative too. I've always thought if you put a little bit of effort behind it or you start to do a little research preliminary on kind of Kyle's story, how it all started, you can beat alpha.
100%. And you're going to be much more motivated to actually take action if you put some financial skin in the game. You're never going to regret going to, I shouldn't say never. I'm sure there's some crappy ones out there. But if you do your research and it's a good get together, a good conference, a good whatever it is, you're not going to regret going to that. You're going to meet the right people. You're going to be more motivated to take action. I couldn't agree with you more.
Another thing, just to give specific examples, like if 10 operators and you only know five other purely passive accredited investors around you, I think your ratio is off. I don't know what your opinion, Kyle, is putting on the stop, but you need to know like your ratio needs to be for every one operator you may consider investing with. You need to know three accredited investor, passive investors. Spitball.
At least.
Yeah. But like it's funny, you have these guys or like, and these guys, they're never relationship people. They're always just fly by night. Let me listen to a gazillion podcasts and let me just use ChatGPT and scrape all these operators, go on Edgar for all the deals.
Yeah.
And they have a spreadsheet of just random operators, hundreds of them. No friends, not friends, but investor colleagues. But
Yeah. Totally. Yeah. You're right. Your ratio is off. You shouldn't, yeah, it should never happen.
anything in particular you think might be useful for our audience or like a tip, due diligence or something comes to mind?
I think we covered a lot. I know it's real estate heavy, and I love real estate as well. Like it's been in a bit of slumber, whether it's Webstreet and digital assets or some other type of asset class. The biggest thing is education and education that you take action on. So there's tons of resources out there on our site, on all the other brokerages we noted. I think you'll see a lot of similarities, and a lot of people compare it to digital real estate. And I'm not talking about crypto and NFT junk like that, but like actual quality assets is, I would encourage you to just check it out and see if it's something you're interested in. If it is, it's a nice way to diversify. And it's a nice change of pace as far as the types of cash flow that you're getting. It's not a piece of art where you're sitting waiting to appreciate. These are cash flowing businesses. And yeah, I think there's a lot of really exciting things on the horizon. A lot of people are going to make a lot of money and a lot of people are going to lose a lot. But with AI and everything that's continuing to change, like these digital assets aren't going anywhere. So I'd encourage you to continue to get educated.
I think for folks out there, it might seem a little oogity boogity, but you're investing in businesses just like real estate with existing P&Ls. This isn't some crapshoot like tech investment where it's just a freaking idea.
No,
This is existing P&Ls, profit
yeah,
and loss
exactly.
statements.
Exactly. Think of it as a form of private equity or micro private equity, as we like to say. And they're already cash flowing. They're real businesses. That's one of our biggest hurdles is like people understanding how they make money, et cetera. But yeah, the
Yeah.
information's out there.
If some people are scared off, that makes it better for the rest of us. I think just like real estate, this space has been beat up the last few years. It's all stemming from the same place. Interest rates are high,
Sure.
lack of liquidity. People are looking less to expand. This is what we've learned through the last business cycle. Interest rates is a huge thing. I have no idea how stocks, bonds, mutual funds act is just out of this world, not really attached to anything. Real businesses, real estate reacts as you would think with what's going on with macroeconomics.
Yeah, spot on. It affects everything.
That's a good stopping point. Kyle, thanks for jumping on. If people want to get a hold of you or catch up what you guys are doing, what's the best way?
Webstreet.co, and my email is kyle@webstreet.co. Super active on there and active on LinkedIn. If you look at the show notes, maybe you can find out how to spell my last name. But if you find me in either place, I'll be sure to respond. I love interacting with fellow investors, so don't be afraid to reach out.
Cool. All right. Thanks, everybody. Just a couple other things this is if you're new to this world, we've actually been looking for deal flow over the last couple of years in this world, but you got to be part of the list. You can go and join at thewealthelevator.com/club. My kind of vision in the future is real estate deals, especially as interest rates start to come back down, offer great passive losses and long-term equity growth. But I think what I'm looking myself personally is real estate deals provide that base. But then if I'm looking for more alpha, this is the world that I'm looking for myself and looking for cherry picking the right deal out there. The nice thing about here is you get the cash flow and you get the equity growth. It's like the best of both worlds, higher returns. But it's not tied to a hard asset. Another way to look at this too is some people have qualified retirement plan money and some people have just cash, right? The nice thing about real estate, you get passive losses through it, which is why most investors will tend to use their cash so they can have those losses flow to their personal tax return. But if you have QRP money through a solo 401k or self-directed IRA, those tax benefits don't really flow to you personally. So it makes it an ideal case where in these types of investments, there's no depreciation. There's no equipment. It's just digital assets, which could be even more stable than a piece of real estate. But from a tax perspective, it makes more sense to align it in these types of qualified retirement plan accounts. So just a little bit of nuance that you pick up from just talking to other people. Of course, there's none of this financial advice. Of course, think for yourself. But here we provide the infotainment, as we call it. One time, just buying little rental properties, and look where we've gone today. And now, as I take guidance from my peer group around me of other general partners, other higher net worth people, if you look at their portfolio, it's a mix of some stock, bond, mutual funds, real estate, and private equity buying businesses. If it's new to you, start Googling via the vicinity, or if we haven't met, book a call with myself. Let's engage, let's connect. This is a relationship business. And if you guys found value in this and you like some of these newer episode direction, shoot us an email, lane@thewealthelevator.com for some feedback. And yeah, thanks for watching. Share with a friend.